Good morning, it's Gene Inger. Just a quick audio-video comment as the computer is crashed at the moment and the Mac isn't ready. Multiple machines in front of me, but this is the one that's working. So, in any event, I just want you to know that there is a postponement in parts of Rule 157, and that is disingenuous, but we won't get into that right now. The S&P rebounding here towards 1470. We'll do a short sale with a 2-point buy stop reversal, 1-point sell stop reversal, and 2-point autopilot. Don't forget the energy numbers come out in half an hour, and they will probably not show a big improvement as far as relates to the stock market. They may actually be bullish for oil and show a drawdown for that matter, but we'll see. And then basically the market is sort of on hold ahead of that. Other numbers and that portion of 157 that is impacting are rather obvious. Basically JCPenney and Applied Materials reduced the forecast. The JCPenney number somewhat mitigates the Walmart numbers, which I think reflected downscale buying, and besides, the market was declining before that, and a lot of stocks were cratering. We've pointed out the weakness and continued weakness in Apple, particularly Google, SanDisk, and many other big stocks that people have been enthused about after the play, and we've pointed out the strength in little stocks like Pure Bioscience, and Pure at 854 up a few pennies again has now quadrupled since we first wrote about it, and that's a very interesting, of course, anti-MRSA, anti-staph, and norovirus, as well as many other aspects in terms of a potential flying stock once it's listed next year, and even in over-the-counter status has done great. The Dow at the moment is down 32 points, was down 60 points. I think that all bounces will fail and we will move lower. Don't forget we have a nominal expiration that takes place tomorrow. We continue with our S&P short sale in the futures from the 1585 area. I know that sounds crazy, but that's because it looks like, hey, you sure you got the high. Well, any regular IngerLetter.com member knows, yes, we did, and that position continues. Now, we have a down, up, down pattern, a rebound, which some people thought was a low. I said no, it's more like what happened just before the thrust down in July, August, at the one that did lead to a tradable bottom. We'll assess that and the validity and merit of that. I hear people talking about having no recession. That's ridiculous. They're still debating it. We're already in one. It's not a 75% probability. People were freaked when the esteemed John Bogle said that, and the reality is it's 100% probability because the United States is in one. And we remind you that American officials are supposed to speak for the economy of the United States, not the economy of China. However, what is good for the United States may be good for China and eventually may draw some of their money in here in corporate investments later on, as we've discussed at IngerLetter.com repeatedly. Meanwhile, we've got the dollar trading up 0.21. We have been looking in the last week or so for a developing low point, at least temporarily, in the dollar, which will negate some of the artificial profitability of big cap stocks versus the perception. Bonds are up 5 ticks today. The 30-year yields, interest rates were never high. A Fed cut would not help and is just more pushing on a string. That is not and was not and will not be the issue. 10-year at 4.223. Crude oil down 69 cents at 93.40, but still in relatively high territory, with the lagging effect of the crack spread continuing to push gasoline prices up. Oil index down 640, gold down 2080, and we've got Merrill Lynch down 17 cents. We have been bearish on Merrill Lynch since 90 and have called for the 60s. We've got overrun, said we'd look at it in the 40s. We're not quite there yet, but we're not that far away. And that does not mean we'll buy it. It means we'll look at it. JP Morgan down 51 cents, Citigroup 63 cents, Bank of America 51 cents, and here's Google up 134 at 643, and we warned about Google as it soared up over 700, and people were having ridiculosity contests thinking it's a momentum game. And we said, instead of talking about going up $100 more, how about down $100 or more? This is a holding action. A, B, C, we break this, we drop into the 500s for Google. Eventually, maybe much higher, but we're not talking about the next 5 years. We're talking about the next 5 weeks here. We are looking at Apple, which we first wrote up at $12 a share, traded at 3 times successfully. We look forward to it again, but not here. Have a great morning. We'll be back in 1 hour with our next comment for our MarketCast members at IngerLetter.com. Good morning.